Good morning and welcome to the trading.com weekly market update. And with me again is Peter Maguire. Good morning, Peter.
Good morning, Andrew.
Okay, plenty to get through this week. Start in Japan. Inflation rate 2.9%, which was pretty much where the market expected. We have a new Prime Minister in Japan as well.
First female ever.
First female. So that'll be interesting to see how she interacts with the BOJ and what they do, not only with the economy, interest rates, etc.
And a raging stock market. Absolutely on fire. Just touched a couple of points shy of 50,000 in the last week or so. And then you're thinking, are we going to see a rate hike? And what's the storyline going to be from a BOJ perspective? So possibly you see a rate hike, possibly you don't. I think the coin's still in the air. I know probability is you won't, but who knows?
Yeah, well, that number comes out later this week. So we look at the yen there. It's been under a bit of pressure for quite some time now, around that 153 mark. So a interest rate hike.
Well, it's fallen a big sell-off naturally, as we've seen from April. But more importantly, you've also seen a US dollar crater in that window of time. So the US dollar's come off 10 or 12%, and the yen's fallen the same amount against the dollar. Yeah,
there's been some pretty unusual correlations this year. Not that we don't see that sort of thing like historically.
No,
this year has been very different.
Yeah.
US. We got the inflation number last week. One of the few numbers we've been able to see. Pretty much came in as expected, around that 3% mark, which was a good news story for the markets, particularly. The Fed later this week probably will cut rates.
Yes, I agree. And 25 is pretty much baked in. That's where everyone's thinking. And are we to see another rate cut by end of year? There's a lot of moving parts that have got to, over the next 2 months leading into Christmas, there's a lot of water to pass under the bridge.
Yeah, but it's looking, well, the market's sort of thinking potentially 2 by the end of the year. So
imagine what that'd be. Giddy up.
Well, considering where these equity markets are, they're pretty hot at the moment.
Yeah, US futures at the moment, you've got the S&P, I just had a look, it was up nearly 0.7% on Sunday trade in the US. So that's just a big move. We had a strong move on Friday, and this has been backed up with a very, very strong move on futures.
Certainly has. We've got obviously plenty of activity in the gold market as well, still trading over 4,000.
Yeah, you bet. And that's really, you've put your mind back to central bank buying, Andrew, and it's just been unheralded. And, they've purchased gold at unprecedented amounts. Global central banks have bought an annualised 830 tonnes of gold in 2025. And now we've got to take a snapshot. In the first half of 2025, 23 countries increased their gold reserves. And central banks are now on track to buy twice the annual average seen in 2011 to 2021 for the 4th consecutive year. So that is just unheralded. And that's where, central banks are buying, but so is retail. Now, this comes after central banks already bought 1,080, 1,051 and 1,089 tonnes of gold in 22, 23 and 24 respectively. 25 put central banks on track for their 16th consecutive purchase. That's the longest streak on record, so consecutive years. And before 2010, Andrew, central banks had been net sellers of gold for the previous 21 years. So this is unusual.
Yeah. Pretty well.
Maybe it's usual.
Yeah, well, who knows? But as you say, the central banks are buying, and then that's getting all the news coverage. And then we're even seeing it here in Sydney where the bullion company, the people are
can't keep up.
Queuing up out the front of an actual shop to buy gold, which is, I just don't think we've seen that
ever.
But
if central banks are buying and the paper market's red hot, then people are going to buy physical.
I know. Interesting times.
Yeah.
Okay, a chart to finish off. This is more about the equity markets and how companies are performing. So it's basically telling us NASDAQ companies with no revenues have gone up an average of 34% this year.
Wow.
And at the other end of the chart, you've got profitable small to mid caps that have only gone up 5%. So the ones making the money...
Make sense of that, I don't know.
The ones making the money have gone up the least.
Well, that sounds a little bit like, I don't know, if you put your mind back to the late 90s and how much the profitable small mid caps made as far as a percentage. But that was how everyone made money, was no revenues, not drawing anything into your balance sheet, and just blue sky.
Yeah, it was just hype and the old fear of missing out on those.
You bet.
Yeah, back in the late 90s, early 2000s, those plenty of IPOs, and very few of those companies would even exist today. So
Probably not. No, it'd be interesting to see how many are still around,
Yeah. But
rebranded or whatever. But
Potentially, yeah.
if their same business model was profitable or existed.
but speaking of that, the big tech companies this week, earnings
They're
out.
reporting 5 out of the 7.
Yeah, so it's
It's going to be a hot week.
Yeah, once again, the last couple of weeks, the solid has been pretty reasonable for not
You
all
bet.
companies, but a lot of the bigger ones have performed pretty
You've
well.
only got to look at the stock market.
Yeah.
You can't argue with it. It's a raging bull market. There's no stop sign no one's got a stop sign up.
No.
It's all go and it's a bullet train.
Yeah. And even some of their forward guidance, you wouldn't say it's been overly bullish,
No.
but it hasn't been negative.
No.
So that's enough for the market to say, oh, okay, well, they're doing pretty well still.
Giddy up.
Plenty going on. Obviously, we've got the Euro rates decision, which is unlikely to move.
Unlikely. You got Canada.
Canada, which will probably definitely move.
Well, they got a present from President Trump, a very special present. They got an extra 10% tariff because they played an advertisement and doctored it from President Ronald Reagan regarding tariffs. So they've been penalised. So it's, no more comment needed.
Tough times.
Oh,
I know. So we'll see how
they
that
need
goes.
America far more than America needs Canada.
Yeah, I think so. But anyway. All right, we'll keep an eye on all that, keep an eye on these earnings, rate cuts, etc. and discuss.
Great week. We'll lead up to Christmas.
Not far off now.
No, less than 8 weeks, or well, less than 2 months.
Yeah. So, all right, and we can catch up again next week.
Look forward to it.
Great, thanks, Pete. And that's the trading.com weekly market update.